Mayuresh Joshi, Head of Equity Research at William O'Neill, India. He's joining in right now. Mayuresh, these high parentage, great value stocks keep getting more expensive and people are ready to keep paying.
That seems to be the case. Morning, Devina. Morning, Neeraj.
Morning.
So again, I think if you probably look at numbers and if you stack it up against their mid-cap peers, I think it's an exceptional set that they report quarter after quarter. So every quarter you probably assume that the base that they're working on, whether they'll be able to surpass that or at least manage that base. And these guys have been doing it very, very well. I think considering the liquidity and the risk averseness in the system itself, the better rated corporates like an HDFC, for example, Bajaj Finance, Bajaj Finserv, I think the kind of funding that is available to them, I think it's very, very easy compared to the others. So I think the others will struggle to get funds at good rates. So the borrowing probably goes up for the lesser rated players, which is probably not the case for these players. Because of their pedigree, I think the advances growth and the confidence in terms of reported numbers, specifically on the asset quality side, remains extremely robust as well. So I think it's a question about they being able to deliver quarter after quarter. Book probably remains very, very strong. And that is the entire premise why I think the markets are probably having more faith in times like these. So you might be giving better valuations or higher valuations. But again, I think the valuations probably remain justified if they're probably giving numbers the way they are. So yeah, HDFC probably remains a pedigree stock. So does Bajaj Finance, Bajaj Finserv.
Actually,
yeah, I just wanted to, and since you were talking and delivering quarter on quarter, we've come to the midst of the earnings season. Anything that particularly surprised you with any particular company's numbers that you were watching out for and you were like, okay, they did well, or they didn't do well?
So I think the larger universe probably delivered to expectations. I think it's the broader universe that probably has surprised to a tad bit. So when you probably talk about certain stocks within the larger universe, I think Avanti Feeds, I think we discussed that last week as well. I think the stock had gone off radar because of what has happened in terms of US regulation, shrimp feed prices going down, so on and so forth. But I think it's shown a sharp rebound. And even in a situation where soya and maize prices had gone up significantly, I think they were able to maintain their EBITDA margins. And the commentary probably looks strong. Again, I think from a risk diversification perspective, I think the non-US markets stand at 26%. So they're clearly understanding the risk of staying with the largest market at this point of time. But they've delivered on numbers, which was to my context, I think a little bit surprised because I thought they might be under pressure. And if this is the case, I think they might continue posting good set of numbers. So I think Avanti Feeds has pleasantly surprised me this quarter.
just one quick follow-up and then we'll get off to the research team. But since you mentioned Quality Financials and Bajaj Finance, the QIP and the demand that is being heard of, do you think this augurs positively for the stock from here on at these valuations?
So I think Bajaj Finance, Bajaj Finserv, both in my opinion are looking extremely strong. Again, if you probably look at numbers, so Bajaj Finserv, for example, I think they've come very, very close to their pivot levels as per our chart checks. What they've delivered in terms of AUM growth, outstanding. The general insurance business was going to get impacted because of the floods in Maharashtra and Kerala. I think that has shown in their combined ratio actually surpassing 100%. So it lies at 102%, but it should probably come down. Life insurance tie-up with Axis Bank, I think that's a huge positive. The only negatives that I saw from the number was that the new business premium, specifically on the life insurance part, has remained stagnant, absolutely flat. Apart from that, I think the slippages, which increased 100 crores on a quarter-on-quarter basis, marginally considering its base and the balance sheet, I think they were the only two negative factors probably that played against them. But again, I think you're probably looking at capital raising happening at probably expensive valuations at this point of time. But they are going to fuel balance sheet growth and the advances growth because they need to continue growing at 30-35% to justify the kind of valuations that they probably have that the street is giving. So again, I think it's a classic trade-off between valuations and growth, but growth is coming. Valuations are on the higher side. I think the street probably still pegs valuations stand still be a derivative in terms of the higher growth that they're delivering. So I think it's better staying put with quality names.
Mayuresh, I want to come to you on Titan. When they gave their quarter two update, obviously the jewelry business disappointed, and you'll probably see that playing out as they report their numbers. But the stock actually, after seeing that brief period of slump, actually started to come back up. Do you feel that this could be an opportune time to probably look at the stock, even though this particular quarter may not be all that great?
So to a large extent, I think the street has gestated the news post the announcement that they probably did. Going forward, I think you're expected to see numbers probably play out, at least on the jewelry business, because gold prices have moved up, and that will probably play out in terms of lower EBIT and EBIT margins as well. But having said that, I think you're probably looking in terms of the forward working for this company. I think the belief that with wedding season coming around, and there are a lot more wedding days this calendar year compared to the last, the expectations of jewelry sales picking up and at least trying to compensate what has probably been a loss of volumes in the first half is something that the street probably strongly believes. What happens with the watches and the watches EBIT, I think that should probably hold up going forward as well. Valuations on the higher side, but hey, I think the street is probably looking at better numbers probably expected to come through in the coming few quarters. Clear disclaimer, I think this stock probably stays part of our core model portfolio.
Okay.
Mayuresh, want to talk about Yes Bank. Yesterday, obviously, you had Rakesh Jhunjhunwala picking up some stake in the bank. Do you feel that, this is, obviously retail investors tend to focus on this a lot more, but from an operational standpoint, from the result standpoint, from the fact that they've got that $1.2 billion in terms of a binding agreement, how does the dynamics change for an investor who wants to look at an Yes Bank?
So there are two aspects here, Devina. One is the capital raising that they have announced, right? Now the regulatory approvals are going to be key here because they are in dire straits of raising liquidity probably. So I think that capital needs to come into their balance sheet as soon as possible. Well, whether the regulators will approve that, who's the investor, that's one point that will act as an overhang till those approvals come through. The second aspect becomes numbers, and numbers were not great at all, right? So GNPA's asset quality have deteriorated. You probably need far more provisioning. Because even if you look at Q1 and Q2, I think the PCR has stayed at 43%. The management intent to take that to 60% means that there will be massive provisioning still required over the next few quarters. So in a scenario where I think the asset quality pressures still remain elevated, where the aging related provisions will come on the balance sheet, and when there will be requirement of accelerated provisioning as well to take that PCR up, I think you're going to take a hit on your book. So retail investors should understand, I think market investors buy it with a different perspective. For the stock to perform, I think earnings have to come through, which is not going to happen, right? So I think it is possible that the stock might retest levels, as I said earlier as well, of 80-85, which was close to their QIP. But I think a sustained up move from those levels, I think, looks a little bit difficult at this point.
I want to also talk about Godrej Properties and what do you expect from Godrej Properties numbers?
So it should be a stable set. So what they've delivered in the past, I think they should be able to do that. What probably happens in terms of the sales velocity for new launches, I think that is where I think the entire focus will be. The second element obviously is that they're very better placed, I think, if you probably stack it up against the other real estate developers at this point of time. So stable set of numbers expected. So I think anybody holding on should hold on. Clearly, I think what happens in terms of the outlook going ahead and the revenue recognition part in terms of new guidelines, I think those are going to be critical, but I think this is one stock which is better placed compared to its peers.
A couple of specialty chemical stocks or chemical companies, and Mayuresh, if you get a chance to see these numbers, one of them is Sudarshan Chemicals, wherein the top line growth is okay, not that great, but the EBITDA growth and the bottom line growth, profit after tax, at 46 crores on the consolidated basis versus 24 crores. That's quite a serious jump, and EBITDA performances look strong too.
Yeah.
The other one is Nocil, wherein optically the numbers seemed okay, but the conference call, the management is talking about how the volumes will pick up in second half. Chinese prices seem to have bottomed out for rubber chemicals, and they expect margins to bottom out at Q2 levels and likely to improve with higher volumes. So two chemical companies. Do you track either of them?
Yeah, so we do track the sector very, very closely. Sudarshan, I think top line will be muted for the next few quarters, but I think the operating performance should improve. So I think the market targeting that they're probably doing in terms of export and the pigmentation that they're specialists in, I think they should show significant amount of improvement. But if you stack that up against its peers, if you do that comparison with Atul or Deepak Nitride or to a certain extent even Aarti Industries, I think the ROEs are lagging behind because of these factors. So they report ROEs of around 12-14%.
Okay.
Deepak Nitride is close to 27% in terms of ROEs. Aarti is close to 25% and Atul is close to 20%. Now, whether you've got a stacking in terms of valuations, I think Atul, in our opinion, probably looks best placed. Aarti has done a QIP. They have also got a huge order from an export market of $125 million which they have to execute over the next 9 to 10 years. So there is significant revenue traction expected there. But Atul, in our opinion, looks very, very good in terms of both margin accretion, ROEs of 20%. Deepak Nitride to a certain extent, the phenol derivatives and the spreads thereof look a little bit doubtful in terms of reported EBIT numbers. I think Atul and Sudarshan probably stay in the list from the specialty chemical place. For Nocil, again, I think rubber chemicals and the play out there in terms of US markets, because China is probably still having curbs and so on and so forth. I think there's a huge potential out there. But if you probably look at raw material prices, they have come off. So they're probably entering into a fixed contract. So aniline is the key raw material that rubber chemical players like Nocil use. They're probably using that over a fixed spread over benzene. So that should protect the downside in terms of input costs. But with lower input costs, they have to pass this through, which means lower realizations as well. They've not given a very encouraging outlook in terms of volumes. So they've degrown -8%. It's going to be a flattish kind of a volume growth going forward in the second half as well. So I think it's going to be a little bit of margin curtailment, volume degrowth, realizations going down. I think there'll be better times to probably enter Nocil, not at this point of time.
Okay, I just stand corrected there. Now, so FY20 volume guidance is a degrowth of 0 to 5% for the year at large. They just expect volumes in certain segments like export volumes to do reasonably okay.
Okay, and since we're talking about management guidance for the paint industry, Berger Paints reports numbers today. Very expensive stock, but when we spoke to the management of Kansai Nerolac, they're talking about growth of double-digit growth for the next 15 years to come. Obviously, I mean, that's a very long duration to track it, but they said last 10 years we've done it, the next 15 years we'll do it, and the market is just growing. In the next 3 to 4 years, it's probably going to become a 50,000 crore industry, and that's the time that you see most opportunity for these stocks. So if you look at Shalimar Paints, you look at Kansai Nerolac, Berger, Asian, which stands to be the bigger beneficiary?
So I think the better names within the decorative paints, so Asian, Berger would obviously stand to gain. And the statistics that the management is putting forth, I think if you look at the historical precedence, I think it's 1.5 times of the GDP. So I think if it's 7.5% that we're expected to grow, I think the volume growth should ideally be between 10 to 12%, which is very, very good for paint companies. The unorganized market, I think, and the market share gains that these players will do will also incrementally add on. Third, I think in terms of Rabi and the Rabi season, which is expected to be very, very good this time round, I think the repainting demand at the end of Q3, Q4 should rebound very, very strongly, which becomes a huge base for all these companies going forward. One can argue about valuations, one can argue about the kind of expensive derivative that they probably draw out with, but input costs are going down, volumes expected to remain stable, the expectations of double-digit volume growth coming through over the next few quarters should hold out in terms of reported numbers as well. This quarter, as I've always maintained, I think Q1 was a push through in terms of volume at the dealer end. It might just stabilize in Q2, and there is a huge impact of monsoons as well. But post Q3, Q4, I think the numbers should keep on coming out to be better. Asian Paints, Berger probably stands out of the interest.
Mayuresh, you already answered our question on the result which had surprised you positively, and that was Avanti Feeds. Any thoughts on Mahindra Holidays and the kind of numbers that they've posted? It's a stock that's, as Devina said, been in the cold storage for a while now. This quarter seems okay. Is it a flash in the pan, or would you believe this could be a start or a harbinger of good times to come?
So I think they are approaching the holiday season, right? So time sharing and the related aspects thereof should probably show further improvement. So let's give it one more quarter. But the stock that Devina was mentioning, I think, Varun Beverages, I think I find that stock very, very interesting. Apparently, I think this stock, as a disclaimer, is there on our global focus lists, which means that we do suggest to our institutional investors across the globe who are India focused for VBL. Strong growth. So I think it's an exceptional quarter, assuming that Q1 is the best quarter. So this should not have been such a great quarter, but they still managed to deliver both organically as well as the growth that we've probably seen both from the non-CSD verticals. Water, the Tropicana plant at Pathankot is probably out, so volume growth thereof should start improving. Finance costs have moved higher for Varun Beverages because they needed to do these acquisitions of the South and the West franchisees. But again, I think they've raised QIP and they've paid a large element of debt from the QIP that they've raised. So the expectations here are that the non-CSD volume should be reasonable, CSD volume should hold out because of better utilization of its plants. I think the fixed cost
of the competitive threat from Parle? I mean, obviously, Fruity, and then the Butter brand. But these are just 2 or 3 products that Parle is giving it a tough competition, and not the rest of the pile, which it actually came in much later.
And somehow, I don't know if I'm mistaken, but I somehow always think that Coke and Thumbs Up have a stranglehold over this Indian cola market as well.
So they're trying to diversify. That's the whole point, Neeraj. I think the entire CSD market, I think they're trying to probably get into the non-caffeinated drinks. The volume growth will improve going forward, because there I think the entire health focus and where the entire synopsis of being more healthy probably stays into play. So they're going to create these drinks with less sugar, less caffeinated, so on and so forth. So water volume should hold up, and there is a large market, I think, both for water, both for juices, as well as I think the kind of innovations that they're probably bringing onto the table. So I think it's very, very interesting. I think the kind of move that it has just delivered, I think if they're able to maintain and sustain this view at these levels, I think there can be even a stronger move over the next few quarters, in my opinion. So I think VBL is something that I've said as a clear disclaimer. It stays on our global focus list, and a lot of suggestions have gone out to our global institutional investors as well for this one.
Let me ask you a difficult one. On your global focus list or otherwise, between Bajaj Finance and HDFC Bank, which one is a better buy?
So I think Bajaj Finance is on the global focus list. On our Indian domestic list, HDFC Bank remains as a top spot within the banking space.
So you covered on both accounts.
What about Zee? What about Zee?
No, so I think we are trying to refrain away from that at this point of time. I think let there be something substantial coming up. So I think there's no point speculating or trying to put forth a number based on something which is assumed to come through. So let it come through. I think it's better waiting and watching for any event-based stocks like this.
Better safe than sorry.
Absolutely.
Okay, Mayuresh, pleasure talking to you. Thanks so much for taking the time out and being with us. Well, watch out. The clutch of names that we've discussed, Varun Beverages and Avanti Feeds is something that Mayuresh Joshi likes.